Hey, what's going on, Cashflow Hackers? It's Chris with Life 180, and today we are doing an awesome live. I've got Jon Wolfenbarger here from bullandbearprofits.com. If you're not familiar with Jon, he runs an amazing newsletter, investment newsletter, really coaches people on, well, the name says it all, bull and bear profits, like how to make money in any economy. I love his message. I love his insight. If you didn't see it before, I actually had him on the channel, I'm going to say 4 or 5 months ago. We had a great conversation about where the economy is going. And so in the light of this, with the presidential elections coming up tomorrow, I thought it'd be a lot of value to bring somebody with his expertise on, somebody that has the track record of success and who's far better than I am at analyzing, all the situations and dynamics and metrics that are at play here when it comes to, all right, which president is best for the economy, which president is best for your investments in your retirement portfolio, which president, is going to have the biggest impact in which different ways. And so the goal of this video is to not choose sides, so to speak, but to keep it as objective as possible, to be very, very information based, and to kind of hopefully keep it as equal. I don't know the word, like as unbiased, right, as possible, to be able to provide you with information, with some context, obviously, to be able to understand like how that would make an impact, on your vote, tomorrow, and like maybe as you're doing research right now to figure out what's the best place to vote, what's going to be in the best interest, which candidate is in the best interest for my goals and objectives in life. We'll go from there. So, Jon, awesome having you here, man.
Chris, always great to see you. Thank you so much for having me back. You're always fun to talk to, and I think you have the best show on YouTube. Thank you very much.
Thanks, man. Well, my goal for this interview is to, ask you the questions, get out of your way, and we can keep it conversational, obviously, but people hear from me all the time. I want to be able to share your perspectives as much as possible. So if we could, I'd love to start hearing from you kind of like, all right, we've got Kamala Harris, we've got Donald Trump, but let's push those aside right now, because we are where we are in the economy. There's a lot of things, I know, as you say, kind of baked into the cake right now. Let's talk. Can you kind of give a little bit of a high picture view, like an airplane view, about like what's going on right now? What are the real impacts, and how can the presidency and these elections have an impact at all? Like where are the areas that they can make an impact, and where are the areas that, maybe are just talking points that aren't really as relevant?
Absolutely. Okay, great. Well, let's try to start from a very big picture standpoint. We're talking right now about the economy, living standards of the average American, and then, ultimately we want to get into the impact on the economy from these policies, what the particular policies they have, the presidential candidates, and then ultimately how investors can invest and profit from whatever is going to come with these new presidents. So very big picture, the federal government, U.S. government, is very large and very powerful in impacting the economy and living standards of Americans. There are 3 main ways the federal government can do this. One is with fiscal and regulatory policies, which are essentially set by the president as well as Congress. Then number 2 is monetary policies, and that's set by the Federal Reserve. The Federal Reserve is unelected. They're appointed by the president. The head of the Federal Reserve is appointed by the president, but they're unelected. They're considered to be independent of the day-to-day politics, but they're obviously clearly intertwined with government politics. So monetary policies are very important, but voters have no control over monetary policies ultimately. And the third area, which can impact the economy and lives very significantly, is foreign policy, and particularly any wars that happen. And right now there's a lot going on with that, so we can get into that later. As far as what lessons we can learn from economics, I've studied economics for over 30 years, and economics is a science, even though it doesn't seem like it to many people. It's not a science like physics or anything, but there are economic laws. There's a law of supply and demand, which is a law. It's always applicable in every country and at all times. There are various economic laws, and there are some some government policies that are better for the economy than others. I mean, it's just a fact of economics, and there are many economists far smarter than me who have written enormous economic treaties over the last couple hundred years that explain all of this. So I've read a lot of these treaties, and I think it's important to know what good policies are before we get into the individual policies of the candidates. So just very high level, as far as fiscal and regulatory policies that the president and Congress can implement. Again, this is based on economics, not necessarily ethical views, or other than just we want a good the ethical view of wanting a good economy and higher living standards, more prosperity for the average American. So good fiscal and regulatory policies, as shown since 1776 by Adam Smith and other economists that have succeeded him, are lower taxes. Lower taxes are better for the economy. They leave more money in the hands of hardworking Americans. The money that they worked hard to earn leaves more money for Americans to spend however they want to spend, whether it's education for their children or health care or buying a house or what have you, and also more money for investing. Taxes particularly hurt investment because people have a general living standard. They spend their money on consumption, and then any extra money they have can go to investment. So that extra money that's taxed away really impacts investing negatively. And investing is the only thing that raises our living standards. Our living standards in 2024 are much higher than they were in 1824 because of investment from everyone who's lived before us. Investment in technology, in new equipment. This equipment raises labor productivity. Higher labor productivity leads to higher wages, higher income. So investment is really key. So any lowering of taxes can help investment. Also lowering of government spending. That again, the government spends money and gets the money they spend either through taxes or through borrowing money or through creating money out of thin air through the Federal Reserve. So by spending money, the government is taking resources away from the private economy. If they're taxing it, they're obviously taking it away from consumers and investors. If they're borrowing the money, they're taking saved money that could be invested in a new business or new technology, taking that money and giving it to the government to be spent however politicians want to spend it, usually unproductively. And then printing money, creating money out of thin air leads to inflation and the boom bust business cycle and all the problems with that. There's no free lunch. You can't just print money. If we could just print money and solve all our problems, all our problems would have been solved long ago. It doesn't work. That would be very cool, but it doesn't work. And then regulations. The fewer regulations is a vague term. Some basic laws, obviously protecting consumers against fraud and that kind of thing are good, but those are just basic laws. But there's a lot of red tape regulations that lead to a lot of bureaucracy and just hamper businesses and lead to lower productivity. So freeing the economy from regulations, taxes, and spending is ideal. So you can look at places like Hong Kong, compare Hong Kong to China. Hong Kong's had a much more free economy, so it's been much wealthier historically than China has. And look at China now versus China 40 years ago. China is much more prosperous than it was 40 years ago when they were hampered by a lot of government policies, let's say. Okay, number two on monetary policies. The best monetary policies, again, free market oriented. You want to limit creation of new money. Again, creation of new money causes inflation, boom bust business cycle, which wastes scarce resources. So all we just need a constant money supply, really. We just need money just to do transactions. We don't need new money. New money doesn't create any new goods or services and doesn't raise living standards. Okay, on foreign policy, again, this can get very complicated and controversial, but obviously, I think anyone could say that peace is generally better than war. Peace allows people to work and produce and save and invest and live happy lives. War is, generally not good for most people involved in wars. So, peaceful, friendly relations, pursuing diplomacy, trying to avoid war, and being, why can't we be friendly with all countries? Why do we have to have nuclear weapons pointed at different countries? Why can't we try to negotiate it and reach peaceful agreements and free trade? Those are generally the good policies to pursue. That's all. Did I stop there?
Yeah, no, that's really good. So I think that's a good kind of high level view. What is your take right now? Then let's dive into it a little bit, right? So what is your take from like, if we look at it through the lens of like, all right, the government has fiscal policy, monetary policy, and let's just say the foreign policy, the war policy, our relationships with other countries. I'm going to lump all those together in a sense because of the fact that I think, I feel like the fiscal and monetary policy are so interrelated. Personally, I don't know how you feel about that. Like they're different, but they're handled very much the same by each candidate. Like there's a very much an overlap in them.
Yes.
And then I believe the foreign policy and the war, like that also, there's a lot of money tied up in how we handle that.
Fiscal policy issue, exactly.
Yeah, for sure. And so what is your take like on each person? Could you give me like a breakdown kind of like high level for each candidate, the good, the bad, the ugly for each side? And like, because the other part to this, I'll say before we go this path is there's what politicians say, and then there's what politicians say they're going to do, and then what they actually will do, right? And so I don't think we can lose sight of the fact that, with each candidate, they're going to say things that they're going to do, and then they're not going to do 100% of them, right? And so there's a risk on both sides of it, right? So can you kind of take that into the equation while you're explaining kind of both sides?
Sure, I will try to do that. And I would say both candidates, again, we're not going to get into personalities and all of that kind of thing, but even though they're both interesting personalities, but both candidates have some good proposals and what I would call some negative proposals. So we can get into those. But first, just really as a reminder, I think most people understand this, but just as a reminder, this incoming president is entering the U.S. government with the worst fiscal situation it's ever been in history. The highest debt levels in history. Debt to GDP is almost 120%. It's one of the highest debt ratios in the world, up there with Portugal and places like that. So tons of debt. And that's happened because we've had an enormous increase in government spending. Actually, during Trump's administration, government spending doubled. A lot of that was during the COVID time, the lockdowns and everything. But government spending doubled under Trump's administration, and it stayed at this very high level under the Biden administration. And as a result, we have the largest budget deficits in history, which has resulted in all this debt. And now that interest rates have risen because of inflation having gone up so much in recent years, because the Federal Reserve created 40% more dollars in 2020, in response to COVID, the interest expense that the federal government pays has more than doubled under the current administration to $1.2 trillion. That's far bigger than all the national defense spending the government does. It's far bigger than Medicare. The only thing bigger is Social Security. So all the Social Security payments that retirees receive is the only thing bigger than the interest expense that the government pays to government bondholders. So this is a very precarious situation. It is unsustainable. Every other country that has gotten into the situation with high debt, very high interest expense, high spending, they've all had enormous fiscal problems. Interest rates have skyrocketed, which has caused dramatic economic problems and hardship for their citizens. So this is an unsustainable and very bad fiscal situation that needs to be remedied. Unfortunately, neither candidate is really focusing on that huge issue. This is the elephant in the room, and neither candidate's really talking about addressing it. They are on the margins in some ways, which we can get to. But anyway, this is the big problem, and it's unsustainable, and a solution needs to be had at some point, or else we're going to face a major crisis, and then some really hard decisions are going to have to be made.
No matter who's president. No matter who's
president. They're inheriting this. And some of these tough decisions in the future might mean major cuts to Social Security benefits, which would be incredibly hard on retirees, of course. Major cuts to Medicare and Medicaid, again, which would be hard for anyone who needs healthcare, particularly the elderly and the poor. So it could be some really painful decisions that have to be made in the future if something isn't done soon to address it. So anyway, with that out of the way, unless you have any questions, I can go into some of
No, I mean, I think just to put put a little icing on that for people that aren't aware, like what you're talking about with Social Security, Medicare, Medicaid, you're talking about the unfunded liabilities, right? Like that we have in this country. And for everybody who's not aware of that, I was just looking at the USDebtClock.org the other day. We have over $200 trillion of future unfunded liabilities, right? That we're on the hook for. And so I would just say this is like, once again, it's not, you have to just think for yourself, if things go awry, let's say, in the economy, and let's say we hit a recession or even a depression, which I don't think is out of the realm of possibility, right? If we go there, who do you want at the helm of the ship, right? Like, who is going to know how to navigate that a little bit better than the other? And I don't know that there's, a right answer across the board. It's everybody's got to kind of make that decision for themselves. I know how I feel. We're not going to get into that. That's not the purpose of this video. But like, I would just say, understanding that debt right now, we have this debt, we have these fiscal, obligations, these unfunded liabilities going forward. And when it's kind of like it's leverage, right? Like if we think about it through like the terms of a personal finance balance sheet, like our household balance sheet, as we're trying to grow, if you're investing and you're utilizing leverage, meaning you have debt and you have an obligation, and let's say you have a line of credit and that line of credit is at 2.5%. We've had a lot of people experience this, right? Like recently they had lines of credit that were 2.5%, 3% on home equity lines of credit and all these things. And they were leveraging that to buy other assets, and they were taking cheap money and leveraging their line of credit and going out and investing. And then interest rates went up, and now all of a sudden their cheap money wasn't so cheap anymore. And now their investments didn't even make sense, right? And so now I feel like that's kind of where we are, you know what I mean? As a country, as a whole, is that we had all these liabilities, but it was so cheap because interest rates were so cheap that we weren't taking them seriously. We weren't taking the risks to it seriously. And now that interest rates have gone up, it's forcing us to kind of take a look at it. And I feel like you just said, not everybody's really looking at it yet, but I feel like it's only a matter of time before we're almost forced to look at it.
I agree 100%.
So
100%, yes. So, all right, with that, let's dig into some of the policies, the individual policies of both candidates.
Do it up.
This is where the fun stuff is. So Donald Trump's policies, okay, just to start with the positives, the good ones from a free market standpoint, which is supported by centuries of economic science from some of the best economic thinkers in the world.
Okay.
So first positive is Trump is talking about tax cuts. He did cut taxes back in 2017, the Tax Cuts and Jobs Act provision. He's talking about extending a lot of those after they expire in 2025. So lower individual tax rates, higher standard deductions. He's even talking about reducing the corporate tax rate to 15%. This one would be incredibly positive for retirees. He's talking about eliminating income taxes on Social Security benefits, which would be great. And in my mind, much more fair, since retirees have already paid taxes to get those Social Security benefits. It's really their money that they've already paid. And why are they being taxed again on it? So that would be great. Exempting taxes on tipped income, overtime pay, all that's great. Any taxes anywhere are great for leaving more money in the hands of hardworking Americans, which provides more incentives to work hard and save and invest. So tax cuts are great. He did that before, and it's something pretty easy for a president to do. Everybody wants tax cuts, so I think he can do that.
Can I inject on that? Just one question on the tax things, because I was reading something the other day that was talking about like Trump's and I don't know the validity or whatever to this, so I'm asking you to get your take, right? Like, so it was saying something. I think it was a Business Insider article that I was reading, and it was something along the lines of Trump's tax cuts are going to save the average ultra wealthy person $200,000 to $80,000 a year, and the average like middle American $1,000 a year. And so they're trying to position it as if it's not an equitable tax cut, right? Now I have my perspectives on why that's still a positive net thing for the country. But I'd be curious to hear, like, what is your response to that for the people who like see tax cuts and they just view Trump in these tax cuts as a way to like really support the ultra wealthy? Can you talk about how that actually has a positive impact on middle class, middle lower America?
Absolutely. And again, I think tax cuts for anyone are great, and the more the better generally, but how tax cuts, the ultra rich, the billionaires, Elon Musk, Donald Trump, people of the world, the economic benefit of that, even though, people who are envious, don't like that and that kind of thing, but there's a major economic benefit to cutting taxes even for the ultra rich. and that is that the rich, because they have extra money laying around, they don't just count the money like a miser would, and just bathe in the money. They invest that money. They have their luxuries, of course, and their fancy houses and everything, but most of their money is invested. Elon Musk's money is mostly in the form of stocks and that kind of thing, investments in businesses that hire people and create new products and services that raise living standards. So by giving, allowing, and this is their money, they earned it, allowing people to have the money that they, or more of the money that they earn. Again, for the rich, they can invest this money. And again, investment is the only thing that raises living standards, because it invests in new equipment, labor-saving equipment. And labor-saving equipment enables you to produce more goods and services with less input of labor. So yes, so tax cuts anywhere are good, even for the rich, because the rich in particular invest this money, and this investment raises the overall living standards of Americans. Let's think back to the 1800s. Lots of problems in the 1800s, but there was no income tax in the 1800s in the U.S. And so you had these ultra rich, Carnegies and Rockefellers. They could keep all of their money that they were making, and they were investing in tremendous production, which dramatically improved the living standards in America. And America went from a forest essentially in 1800 to one of the most prosperous countries in the history of the world by 1900 or so. So tax cuts are great even for the rich. So,
and as much money as the rich, as like Carnegie and the Rockefellers and all those people made back then, they also created hundreds of thousands of jobs across the country, right?
Absolutely. With higher and higher pay, and
higher and higher pay, and that increased the living standard of those people. So if we do this and we look at the Trumps, the Musks, the Bezoses, like all those people, every time they get a tax cut, it gives them more money to reinvest in their own companies, which when you think about how they actually created that success in the first place, it was by reinvestment, right? And so when they're able to reinvest in their own companies, it creates more opportunity for more middle-class people to make more money and to increase that base of how many people can actually earn that amount of money. Because if they create more jobs, it expands the middle class. Is that a fair assumption?
Absolutely. And the lowering the cost of the goods and services they buy. I mean, Amazon, for example, was an amazing invention. I mean, totally. Who doesn't order tons of products on Amazon at great prices, great availability, instead of having to go to the store and paying higher prices and that kind of thing. I mean, just that alone. It's incredible improvements in living standards by entrepreneurs who take risks. I mean, it takes a lot of risks to start a business and hire a lot of people and raise capital and invest money and all that kind of thing. I don't see why it's necessarily fair to take the money, the hard-earned money, away from them. So.
Yeah, no, that's great. All right, cool. So that's a positive for Trump. You got more positives for Trump?
Taxation. Yes, he's talking a lot about deregulation. Again, as I mentioned, some regulations are good, particularly when they're laws based on fraud and that kind of thing, protecting people. But there's a lot of just huge government registries of regulations that you need an army of lawyers to try to figure out, and a lot of it's contradictory, and all of that stuff makes it difficult for people to start businesses and compete, and it tends to actually lead towards greater it tends to benefit the largest companies and makes it harder for the small businesses to compete with them, because the largest companies can hire the lawyers and pay the lobbyists to get favorable legislation for their company and industry. So deregulation, I think, is very good for the average person, particularly poor people, particularly for small businesses. So deregulating the economy would be great. Trump's particularly talking about less regulations in the energy industry. Obviously, more energy production in the U.S. means less money going to Middle Eastern theocracies. So I think deregulation generally is good. So that's a positive. On spending, just on spending, and it's okay. We'll get to that in a second. Okay, another potential positive is Trump. This could be revolutionary in some way. I don't really recall of another president talking this way before. And Trump says a lot of things, and what he actually does. This one, I think, would be extremely hard to change. But it's interesting that at least he's talking about it, so is his vice president pick, J.D. Vance. But they're talking about the Federal Reserve and saying, maybe the Federal Reserve, the way it's operating, is not ideal. Maybe it's not
Ooh.
perfect. And, maybe increasing the U.S. money supply by 40% in 2020 was a little bit much. And we now, we've had the highest inflation in 40 years because of that. All sorts of problems. It's put enormous pressure on consumers. Consumer confidence is at horrible levels because of this. And, the Fed has just had carte blanche to do whatever they want. And quantitative easing, 0% interest rates, giving tons of money to foreign banks to bail them out, rich bankers in Europe, et cetera, getting all this money. So it's, they're saying, why, and why does the Fed have to be independent of voters? Why can't voters have a say in what monetary policy is? Now, this can be dangerous, obviously, but, just a little brief history. Milton Friedman, he's one of the most famous economists in history. He won the Nobel Prize in economics in the 1970s. He and others, decades ago proposed requiring banks, commercial banks, to hold 100% reserves. And this would eliminate the risk of bank runs and any need to bail out banks and eliminate the business cycle, eliminate inflation. So 100% reserves.
So basically eliminate fractional reserve banking.
Exactly.
Okay.
So require that for banks. And then there's more. And then put you could eliminate the Fed, or you could have the Fed as part of, essentially part of the U.S. government, and have elected officials in Congress, for example, who are not always the best people in the world, but at least they're elected, in charge of the Fed. And essentially, if the U.S. government wants to spend money on a war or whatever they want to spend money on, instead of borrowing that money and issuing bonds and having, banks, buy these bonds, or investors buy these bonds, savings go into these bonds, and then the Fed buying the bonds, instead of having this crazy circle with the Fed involved and printing money to buy these bonds, the Treasury could just tell the Fed to give them, credit their account for however much money they want to spend, and spend it. There's no bonds involved. There's no monetary policy involved. It's just the Treasury printing money out of thin air, just like Zimbabwe does or Brazil does, whatever. This obviously could be bad. It could cause a lot of inflation and everything, but at least it would be out in the open, and elected officials would be responsible for voters, and voters can vote them out if inflation is too high. Now we have the Fed, again, increase the money supply by 40% in 2020. We have this huge inflation. And what can voters do about it? Nothing.
Nothing.
The Federal Reserve.
Who's accountable?
Yeah, there's no accountability. So Trump and J.D. Vance are talking about, maybe taking away some of that Fed independence and putting monetary policy more in the hands of elected officials. So that could be very interesting. But the Fed is incredibly resistant to any change in their power. So I think that will be tough. But that one's very interesting. And then on war, this, could be the most important factor for the entire world, of course.
Especially over the next 4 years.
Yeah, if we avoid World War III, it would not be good for the economy or much of anything else if we have World War III and a nuclear war. So, the U.S. avoided war with Soviet Union and Russia for over 70 years because we didn't want to have a nuclear war. Came close many times, the Bay of Pigs, et cetera, or the Cuban Missile Crisis. Came very close to World War III, and fortunately we avoided it. So having a war with Russia, which has the most nuclear weapons of any country in the world, other than the U.S., having a war with Russia is not ideal if we could avoid it. And, the Soviet Union broke up over 30 years ago. The Berlin Wall came down. I mean, Russia's really, it's just another country with another corrupt politician that's not good. But there are lots of countries run by politicians that are not particularly good people and are corrupt. So why do we need nuclear weapons pointed at each other? I don't know. And no one in the last 30 years, no president has said, hey, why don't we change this? Why don't we try to be friendly with Russia? Maybe we can help them, advance to a more enlightened state with better, better human rights and that kind of thing, instead of just keeping all these weapons pointed at them and having this tension, which could erupt into World War III. So Trump was the only president in recent memory that didn't start a new war. And he's saying he wants to end this conflict, the Russia-Ukraine conflict, and not have World War III, and hopefully not have World War III in the Middle East. He has an issue with China. Hopefully we don't want a war with China. There's lots of Russia, China, Middle East are hotspots for a war. It could be nuclear war, and anything we could do to avoid that would be great. So Trump seems pretty good on that front.
I love it.
Okay, then the negatives. One big negative under Trump is potentially that he doubled federal government spending under his administration. And a lot of that was during the last couple of years last year or so with COVID, which was a unique time, but that high spending has stayed at that level under the current administration. So high spending is a problem, and Trump spent a lot of money under his presidency, and he's talking about spending more on infrastructure, for example, which is a very popular thing politicians always say in an election. But infrastructure spending on roads and that kind of thing can lead to very wasteful spending, a lot of corruption, with a lot of money going to favored government contractors, that kind of thing. Again, the government is broke, and last thing it needs to be doing is spending more money. It should be slashing spending. Elon Musk is talking about, maybe cutting $2 trillion out of the government budget, which would be fantastic. So, Elon Musk is somebody who, pretty amazing entrepreneur. So if he was involved, that could be very interesting. Infrastructure, you can privatize a lot of infrastructure, let private businesses do that. A lot of countries around the world have done that to great success.
It's interesting when you say that in the Dominican Republic where I live, the best road on the entire island is a private road run by tolls, and it was built by private business. And it is far and away the best road on the entire island. You have to pay a toll. It cost me $6 to drive the 80 kilometers on this road across from the north side to the south side of the island every time I go on it. But guess what? It is like a smooth sailing ride that is like perfect the whole way. The rest of the infrastructure in this Dominican Republic island is kind of a mess, you know what I mean? And so, that is what it is. I not to cut you off.
Same in Portugal. Same in
Portugal. Okay. So that's just an example. Like there are ways to do this, and it's tolls or
creative ways.
It doesn't need to be taxes. I mean, that seems to make sense, right? Like they don't tax people across the whole island to use that. They tax you by charging you a toll when you want to use the road for productivity. And so that's like, to me, the most pure exchange of value that you can find. It's the people that are paying for it are the people that are using it. The people that use it the most pay the most. And it just seems to make the most sense to me.
Yeah. And that's how we do everything else. That's how we do supermarkets and everything else.
It's like with the government thinking that they're going to take, it's like, we want to invest in infrastructure, right? It's like, all right, we want to invest in infrastructure, but we're broke. What is the budget deficit annually right now? Almost 3 trillion, something like that.
Yeah.
Right. 2 to 3 trillion.
2 to 3.
So it's kind of like going into a personal household and be like, you know what? I want to fix my house up, even though I'm up to dead in my eyeballs.
I want to pave a new.
I want to redo the roof, redo the siding. I want to put an addition on. I want to do all these things to make my house better. But you don't have the cash flow to do it. So what are you going to do? Go take more money as a loan? Eventually, you're gonna lose the house to foreclosure because you try to do too much too fast. The thing you need to do as a homeowner in that situation is get your cash flow in order, eliminate your debt, free up more free and clear cash flow, go produce more, increase your cash flow, and then expand your house. Right? Like that's kind of where we are in this country, in my opinion.
Exactly.
It's like we gotta not do too many things too fast. The idea of infrastructure is great, but how we get there is a whole different conversation.
Exactly. And one example of how, government cuts, a lot of people say, oh, government spending is stimulative. That's a myth and it's not true. And one example of this is World War III, World War II, the government obviously spent tons of money, had a huge deficit. It was an emergency situation, et cetera. But after World War II, the slashed spending massively. And people thought, a lot of Keynesian economists thought there'd be this big depression because we just had a depression. But instead, there was this enormous post-war boom. I mean, the economy was freed. All the price controls of World War II were eliminated, and the economy, became the envy of the world in the U.S. And the same thing happened again if we free up the economy. Okay, another big problem for Trump. Is one of his favorite things, tariffs, which he says is a beautiful word, and tariffs are essentially a fancy word or not so fancy word for taxes on American consumers. So he's talking about, maybe taxing all goods from China, 60% tariff on goods from China. That means Americans who are going to Walmart or wherever to buy a product made in China would have to pay, 60% more, and all that tax money going to the government. So taxes or tariffs, protectionism is always bad. This was proven, a couple hundred years ago by David Ricardo and other economists that protectionism is always bad with regard to trade, and that free trade is always positive for consumers and the economy. And so now Trump, I think he likes to think of tariffs as a negotiating ploy. He's a deal maker. He wants to make a deal. So he talks about how he told, the president of France that he was unhappy with something France did, so he was going to tax champagne, 100% or something like that. And he got the president of France to back down. So that's fine. If he can negotiate, however he negotiates, great. If he can free up foreign markets for American goods, that's wonderful. But if he actually implements, particularly any high tariffs, that could be a real disaster. So that is something that any economist would tell you, that tariffs and protectionism are bad for the economy. So that's something we don't.
Can I ask you a question on that?
Yeah.
Can I ask you a question on that? So Donald Trump wrote the book The Art of the Deal, right? I think that was his like one of his popular books that he wrote back, before his political days. And so what you're saying, what I'm hearing, and just clarify, is like, if he's leveraging this idea, this concept of taxes or the tariffs to China or any other country as like a negotiation tactic, basically what he's doing is he's saying, all right, if we do this, like, we're going to implement pain, right? Because tariffs are actually inflationary in a way, because it's going to cause goods to be more expensive. Do I have that understanding correct?
You do have that correct. The issue is, if there's no increase in the money supply, then those particular goods would go up in price and other goods would go down in price, and you would generally have no change in overall prices. Okay. But fair enough. That's sort of a technicality. But yes, it would raise the cost of those goods. So if you're buying champagne from France and the price doubles because of tariffs, you'll start buying from California or what have you. But your living standard is lower, because you're probably going to end up paying more for the California wines, and you're not going to get the French champagne you wanted, and that kind of thing. Anyway, so go ahead.
So that said, though, like, if he's using these tariffs let's just use China as an example, right? Like, he'd go to the leadership of China and say, all right, we're going to impose a 60% tariff on all the goods that, you export to the United States, right? Or whatever it is. And basically what he's saying is, that tariff is going to cause a lot of pain for you, and it's going to cause a lot of pain for us. And he's I don't think he's ever going to do it, but what he's trying to position himself, and I think he's uniquely designed to position himself in this way, in the sense that he's bold enough to have people believe that he'll actually do it.
Right. He's crazy enough to do it. Yeah.
You know what I mean? Like, and in that sense, where a lot of people give him a hard time for being a little loco, it's a positive thing, because he can leverage it. Because especially after watching the Joe Rogan interview with him, I don't think he's as crazy as most people think. And B, I think he'll use that perception of craziness to be like, listen, this is going to cause a lot of pain for all of us. And what I know about him is he's going to position it as like, we're willing to go through it. Are you? And I don't think you are. It's kind of like a game of chicken, if you will, right? Totally. Like, who's going to give first? And in that, that's how he negotiates. And so I think a lot of the stuff that he does in the media talking about tariffs are less about him actually wanting to implement them, and more about him trying to hype them up and almost hype his position publicly to make it seem more realistic and make it seem more likely that he's going to do it. That way, when he gets into the negotiation table with these leaders from other countries, he's putting all his chips in the middle of the table. I'm a poker player. And he's like, all right, call my bluff. Tell me how it goes for you. You know what I mean?
Yeah, and you put that better than I've heard anyone put it. That's exactly right. I think you're right.
So that's the way I see it. And so, but to your point, from what I'm hearing, if that's what he's doing, it's a wild positive, right? It's an amazing positive thing for our economy. But if he actually, we take him at face value and he does it, it's a huge negative.
Correct.
Okay, cool.
Very well put. Yeah. Thanks. And again, he's got to get this through Congress. He can't, just do whatever he wants, but
sure.
And there could be repercussions, but yeah.
Okay.
No, I think you summed it up exactly well. And then immigration, just to touch on this, it's obviously a very controversial topic, and we don't need to get into all the controversies of it. But just for the economic standpoint, generally, the more peaceful, hardworking people you have in an economy, particularly, let's say if you get a scientist or engineer from China or India or someplace, that's great. You want peaceful, hardworking people producing more and more. It's been a huge reason for America's success, et cetera, over the years. But on the other hand, you don't want people who commit crimes or who go on welfare and just take tax money. So it's pros and cons. And it's obviously very complicated, and I don't have all the answers. But anyway, that's something that, there could be certainly better immigration policies, I think, than we have now. And whether Trump gets that exactly right or not, I don't know.
Is it fair to say that we got to look at immigration the same way we look at the rest of the economy, as if we got to look at it through the lens of production versus consumption, right? Like, it's not just, is immigration good or bad? It's like, who are we allowing to immigrate into this country, right?
Exactly.
And if we're allowing
gang members
right,
committing crimes, that's not great.
If we're allowing productive members of society that are going to come here and be a value add to the economy and to the productive value of the economy, then okay, that's one thing. But if we're allowing people to come in with rap sheets and who don't know how to read and write and are just going to become a strain financially on the system, that's more of a consumptive nature, and that's going to be a net negative. And so, I think we got to just look at what are the policies and procedures to vet the people who are actually going to immigrate. And I don't know why, for some reason, I'm just going to, this is my opinion, I'm not saying John feels this way, but like, I don't know how in the United States, it's like people have gotten to the place where it's just like, for some reason, the United States is the only country in the world that's just like, everybody should just be welcome no matter what. Like, we have to look out for the best interests of what's good for the country first, because otherwise allowing millions of uneducated, people that can't read or write, like, I mean, and listen, this is a hard,
can't speak the language,
can't read the language, and can't do all these things. Like, it's a hard situation, because I know, like, people with big hearts want to help people and all these things, but it's kind of like when the airplane's going down, they say in an emergency, put the oxygen mask on yourself first, because if you don't, you can't help the people around you. And if we try to do too much too fast to allow all these millions of uneducated people to come in this country that are going to be a financial strain, that's going to end up taking the ship down with them. You know what I mean?
Right.
It's kind of like, so we got to be really, really careful.
Exactly right. Again, if you think back to, let's say, the 1800s, again, it's interesting to look back through history. Immigration was generally a good thing in the United States. And what was different then? What was different then is, let's say you came from Europe or wherever, let's say you came from Europe, it wasn't easy to go from Europe to the United States. You had to, buy a ticket for a boat, which probably wasn't cheap. And then when you got to the United States, there wasn't free education or free housing or free healthcare. You had to work, and you had to work right away, and you had to work hard. And the sooner you learned the language, the better. The sooner you assimilated, the better. If you're committing a crime, they probably had police that might actually put you in jail or something, or kick you out of the country. Exactly. So it was very different. Now, if the other extreme now, just to touch on that, is Sweden, for example. My understanding of Sweden, you can, anyway, let's say an immigrant moves from a foreign country, and they can get free housing, free healthcare, free education, and a check every month for, let's say $2,000 or something, just to spend on whatever other expenses they may have. So everything's free essentially, and they get money. And what's their incentive to learn the language or to get a job or to assimilate? And then they have, especially, let's say it's a young man, 18-year-old man with all kinds of free time and who don't need to work are going to cause a lot of trouble, most of them. So
unfortunately,
they can commit crime, and why not sell drugs? I can make even more money, and it's not a real job, and it's off the books and everything. So anyway, that welfare, just handing out welfare, free welfare to people moving somewhere, it sounds very nice, I understand it, but it can lead to a lot of crime and a lot of other problems, and a burden on an already tapped out government budget. So
yeah, totally. All right, sorry, I didn't.
So we talk about Harris.
Derail that. Yeah, let's talk about Harris. Let's talk about some positives about Harris.
Positives for Harris. There are some. First of all, she is talking about some tax cuts, which is great, as we've already talked about. She's talking about, I guess, some middle class tax relief, which is great. Anybody who gets tax cuts is great. Middle class, lower class, I would start there. And again, we've talked about the rich as well. Anybody, but she's talking about a child tax credit. That's great. Tripling the earned income tax credit for workers, et cetera. That's great. And then to encourage entrepreneurship, a $50,000 tax deduction for starting a new business. That's fantastic. So yeah, any tax cuts are great generally, and particularly encouraging, new businesses and investment, and new businesses that can hire people and create new goods and services and raise living standards is terrific. So some tax cuts are very good. And that's the primary positive from an economic standpoint I see from Harris. There's some negatives which we can go to if you want me to. Or if
yeah, like
if I missed any positives, let me know.
Well, I can't. I mean, honestly, I don't know of a lot of positives for her when it comes to the economy. I think it, like, once again, just my perspective, but it's when I think about both of the candidates, I think about it through the lens like this, is like you said it at the beginning. A lot of what's going to happen in the economy at this point in time is kind of baked into the cake. I love the way that you said that, right? Because things are so far gone right now. Our budget, our annual deficit is so upside down. So from a cash flow perspective, our country is screwed right now. From a debt perspective, we're so far upside down. And as you said before, because of the fact that interest rates have gone up and most of our debt is more short-term debt, like those are rolling over, and the interest on our debt alone right now is suffocating. You know what I mean? And so, like, how that's going to impact moving forward and what we're going to do and how we're going to deal with that, I think there's no getting out of this without problems. I think Peter Schiff always says, like, it's the equivalent of like a heroin addict being high on heroin forever and thinking they're going to get off without any kind of withdrawals or pain. It's like, you don't get addicted to this debt, addiction, and because of low monetary cheap money, effectively, we basically got addicted to it because all this money was cheap. We ran it up. We didn't have to deal with the consequences. And then the environment changes and we got to deal with it. We got a real problem. And so now how do we deal with it? And I think it comes down to efficiency. And I think, that's why I love the fact, listen, to me, Elon Musk is far and away the smartest guy on the face of the earth. Is that fair? Like, I don't know how you feel, but like,
yes.
Guy's like an alien. He's like an alien, right?
Yeah,
and so, and I'm just willing to vote with him no matter what. Like, if he's saying what he's saying and he's talking about needing more efficiency and all this stuff, that's where I'm going. You know what I mean? Because
absolutely. I mean, it's obvious.
You don't build companies without efficiency. And guess what? You can only, kick the can so far down the road. And our government, if I've done one thing poorly in my financial projections over the last 20 years, is I've learned this stuff. I've underestimated the government's ability to kick the can down the road. Right? Like, it's astounding to me, their ability to do so. And so what I would say, though, is at some point in time, you hit the end of the cliff. You're not kicking the can down the road, you're kicking it up a hill. And at the end of the hill, there's a cliff, and eventually, we're going to hit the end and we're going to have to deal with it. And I just come down to it and I say, all right, like, whether it's Trump or Harris, they're both going to have to deal with it in a crisis, which I believe we're going to have a crisis. Whether it's during this next tenure or whether it's the next, president after that, I'm not going to call the timing of that because, once again, my gut tells me it's in the next tenure, and I don't want to underestimate the government's ability to kick the can up the hill. You know what I mean? Like, so I don't know, but what I do know is how I make my vote is in a crisis, because I think it's inevitable that we're going to hit one, and I want to make sure that whoever's in office is prepared to deal with the crisis. Who do I trust the most to deal with it? Who do I think is going to be able to navigate through it the most? And in a way, it's kind of like if you're at the helm of a company, you're the CEO of a company, and you can kick the can down the road, and sometimes, maybe you can navigate the direction your company's going. You could delay, maybe some fiscal problems or challenges, and maybe sometimes if you do that, it leads to more problems. And some of the best CEOs and business leaders in the world, Elon Musk being one of them, the way he managed Tesla when they were going through all their stuff before they really boomed, it's one of those situations where sometimes a more controlled, intentional contraction, even though it's going to hurt in the short term, is better for long-term productive growth. And I think one of the challenges, and my call to anybody who's watching this is not to sway your vote, and I'd love to hear your take on this, John, but is I think the reason we're in this situation right now is because of the fact that voters think too short term. And everybody, politicians are just election to election, thinking what's next year look like, what's 2 years look like, what's it look like for my ability to get reelected. I think the fact that we don't have term limits in place for Congress, is a problem. I think that, there's a lot of these political things that come into play, but I think the fact that not enough people have enough of a long-term vision to understand, like, not what is it going to look like over the next 2 years and what's good for me right now, but what are the actual principles and implications of these policies and procedures and, regulations or lack of regulation, or all the different things, and monetary policy and all this stuff. Like, how does that really impact the long term? And when we look at everything through the lens of consumption versus production, I think that's what it all comes down to.
Absolutely, very well put. I completely agree. Yeah, and we have these 4-year presidential terms, and so a president gets 4 years. If they're really lucky, they get 8 years. And so their incentive is to, promise voters all sorts of free money, that comes from somewhere.
Yeah.
And it's just an endless cycle that repeats, and that's the democratic system we have now. It encourages politicians to think short term, and it encourages voters to think short term. Everyone wants a free handout, so people want to vote for free handouts, but it's got to be paid for by somebody, and the bill is really coming now in the U.S. And again, what it's going to lead to is you're either going to pay much higher taxes. Think of taxes in Europe. I mean, Europeans pay double the taxes Americans pay, let's say. So you're going to pay much higher taxes if you want all this free stuff, or you're going to have much higher inflation. Zimbabwe is up there. Brazil, you got Argentina. I mean, look at Argentina. Yep. Argentina was so wealthy, and now it's a basket case with 200% inflation. So you're gonna have high inflation, or you're gonna have super high interest rates. And super high interest rates, how are you gonna buy a house or borrow anything, or how are you gonna pay off your debt, et cetera? And how's the government gonna do it? So you're gonna have real. That's what a crisis is gonna hit you.
Well, and if you follow, like I watched Elon Musk talk about the fact that he wants to create this government efficiency department, right? Like, and I mean, first of all, I'm all in on that. Like, but at the same time, you can't do that without causing pain, right? And in doing so, and when I say pain, I mean asset prices are going to come down. There'll be a recession, but like it goes back to the heroin addict comment. Like, you're going to go through pain, but once you get through that pain, your foundation is going to be much more solid. You're going to be healthy, and you can actually start to be productive and build on top of that. But you got to go through rehab first. And I think as a country, we need to go through monetary, financial, fiscal rehab, to be able to get to this place where we have a foundation that we can actually build off productively. And we're just not there right now. Like, I think it's inevitable that we have to go through that. And I would just say, I encourage people to look through the lens of, once again, because the purpose of this video is talk what's best for our investment accounts, right? Our retirement accounts. Like, how is this next president going to impact us? And I would encourage everybody to think about, like, not just over the next couple years, but over, most people watching are going to have a time horizon for their retirement planning of 10 to 20 years or more, right? Like, based on the demographics of my channel, like, that will be what it is, right? And so from that perspective, like, what can you do? And I want to ask you this, what can you do to weather this? Because it's the cyclical nature of things, right? We're going into this, I would call, like, kind of a winter season, right? Where things are going to be stagnant, flat, if not negative, right? Over the next decade. Goldman Sachs just put out this, what would you call it? Like a hypothesis, or they kind of called a lost decade. You and I talked about this in our last video that we did together. Warren Buffett's favorite metric is calling for a lost decade in equities. That said, that has nothing to do with the presidential election right now. That's just baked into the cake, as you would say, right? And so as we go into this time, regardless of who wins, my question to you is, what can you do over the next couple years to insulate? Let's say you've done well, you've ridden this bull market up. What can you do to kind of like take money off the table, if you will, or to protect that money, to prepare for opportunity, to make sure that like you don't lose a lot of the gains that you've had in this period of time? And yet also timing the market's a dangerous thing as well, a lot of people would say, right? Like common financial thought would be like, don't time the market, just buy and hold, ride it out. I don't agree in that sentiment personally. I don't handle my personal finances like that personally, but I'd be curious to hear from you, because you're the guy who is way better at this than I am. And you teach people how to make money in every economy, right? Like in equities, in investing. You know, I do most of my stuff just fully transparently through real estate and other, you know, business ventures. I have a very, 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 very small percent of my equity, my net worth in markets. I just don't do it. Like I'm mostly real estate. But, you know, my conversations with people like you, I've started to more get down that. Now I've started to kind of like throw some stuff into the market strategically, you know? So what do you say like right now people should be doing regardless of who wins? Because I think both you and I agree, like regardless of who wins, it's going to get ugly. Maybe not immediately. Maybe if one person wins over the other, it'll happen faster than the other person, whatever. But eventually, sooner than later, you know, you can only fight the laws of gravity for so long.
Exactly. Well, very, very well put. So just to make it as clear as I can to people listening to this, there are two big issues right now, particularly for the stock market, which is where, you know, most people are invested who invest, you know, outside of real estate. And I agree that real estate is terrific, but that's a separate issue. So for most people who have a 401k or an IRA, they're invested in stocks as well as maybe some bonds, which we can touch on as well. So there are two really big problems right now. Number one is investors in aggregate are incredibly bullish right now on stocks. There was a recent survey by the Conference Board, and investors, a higher percentage of investors expect stocks to be higher a year from now. Highest percentage in history, at least in the last 40 years, expect stocks to be higher a year from now. So investors are incredibly bullish. And as a result, they've bid up stock prices. They've bid up stock market valuations to now all-time high levels in history. Last 100 years, highest levels ever the stock market's been valued at, higher than the 1929 peak, higher than the 2000 peaks. Remember, 1929, after 1929, the Dow Jones Industrials fell about 90%. After 2000 peak, the NASDAQ fell about over 80%. So very big drops, very painful. And it took a long time for people just to break even back to those levels. So right now at these all-time high valuation levels, based on the statistics of the last 100 years, the stock market is likely to be probably at least 50% lower in a decade, regardless of who wins the presidency, regardless of what government policies, just because of valuations, which are driven by investor psychology. So that if you're invested in stocks, you know, generally you would rather not have 50% less money in 10 years, right? We'd rather avoid having, you know, 50% less money in a decade.
Can I ask a question on that? Can I ask a question on that part? So when you say have less money, are we talking nominal value, meaning like if inflation is 5% and your equities go up 5%, that's really a net gain of zero, right? Like that's saying like the valuation, or are we talking, well, I don't know if I use that phrase right. You know, like, are we talking inflation adjusted returns, or are we talking?
No, just nothing to do with inflation. Real, or sorry, I shouldn't use the word real. Nominal. So if you have $100,000 in S&P 500 now, in 10 years, it's probably going to be more like 50,000.
So if that's the case,
and that includes dividends, everything.
So if that's the case, it's even worse as far as the actual.
Right. If we have high inflation, it's going to be the worst decade in history. Other than the 30s, maybe worst decade in history. In the 1970s, what happened? You had a bad stock market and you had high inflation, and it was disastrous for retirees and savers.
Sure.
So that I really think anyway. So we're gonna have I think much lower stock prices, and number two, we are probably gonna have a recession probably over the coming year, and the reason for this, just brief history again, the Fed created 40% more dollars in 2020 in response to COVID. This caused the highest inflation rates in over 40 years. That forced the Fed to hike interest rates at the most aggressive pace in 40 years. They raised interest rates over 5 percentage points. That caused the biggest decline in the money supply since the 1930s. And the yield curve, which is the difference between long-term and short-term interest rates, inverted. So long-term interest rates were lower than short-term interest rates. And that yield curve inversion lasted longer than any time since the late 1920s, any time since the Great Depression. And the longer the yield curve inversion, historically, the longer and deeper the recession and bear market. So we've had very aggressive Fed monetary policy. That's already done. There's nothing that can change. It takes 2 years or so for Fed policy to have an impact. So that what happened the last couple of years is going to impact the economy over the next couple of years. And so Fed rate cuts now won't help the economy probably for at least a couple of years. The Fed cut interest rates all throughout the early 2000s recessions, through 2008, 2009 recessions, didn't prevent those recessions or the bear market. So the Fed interest rate policy, I think, has pretty much guaranteed a recession. We're already seeing employment levels are actually down year over year by several hundred thousand employees. The unemployment rate has already risen by 0.7%. Every time it's risen at least 0.5%, there's been a recession. Housing starts are way down. All major leading economic indexes have fallen to levels indicating a recession is coming. So I think whoever's president is going to inherit this recession and a major bear market, and it's going to be very challenging for them, at least their first year or two in office. So what does one do about that? So in a recession, and particularly with these valuation levels, you're going to typically, I think, see probably at least, I think it's very possible to see at least a 50% decline in stocks and other risk assets, including Bitcoin. Bitcoin is highly correlated with stocks, so it's a risk asset at this point in time. So I think you're going to see big declines in most risk assets. The big question is what happens with inflation and interest rates. If a recession becomes obvious, which I think it will in the coming probably months, and I think it's already obvious to me, and I think it's becoming obvious to the Fed. The Fed already announced a 50 basis point rate cut a month or so ago. They're going to announce another rate cut, probably 25 basis points this week. If the Fed starts to panic and cuts rates aggressively, there's a risk that could lead to a resurgence of inflation. We're already seeing inflation start to tick up a bit, and higher interest rates on bonds. We've already seen interest rates on bonds go up quite a bit in the past month or so since the Fed cut rates. So if you have higher interest rates, higher inflation, then if you're investing in bonds, those are going to keep going down. Bonds have already been really rough place to be the last few years. Bonds can keep going down. If high inflation and a recession, that's stagflation, which is the worst case scenario for American living standards.
It's the 70s.
And higher interest rates on federal debt leads to even higher interest expense for the federal government, which creates more budget pressure, which could lead to big cuts in federal spending, including health and Social Security, particularly hurting the poor. So this could be a major crisis. If the Fed cuts interest rates enough to let inflation get out of control, to try to stop a recession that I think it's too late for them to stop, you could have a repeat, essentially, of the 1970s. Could be worse in many ways, hopefully better, but essentially a repeat of a stagflationary decade or so. And in the 1970s, the best place to invest was commodities, particularly gold and silver. Gold in particular, most investments fall in a recession and bear market. Gold is one of the only investments that often goes up in a recession and bear market. It doesn't always, but it often goes up, or at least more or less trades even in a recession.
Isn't it fair? Gold and silver in 2008 both got smashed. Right? They went way down.
They did. Initially, they went up kind of early in the recession. And then during the major crisis of fall of 2008, they both went down a lot. They pretty quickly recovered. So I think for the whole period, they were more or less break even, I think. But so that was that was a deflationary recession. If we have an inflationary recession, I think it's very different. Gold and silver, did pretty well in the 70s recessions, and then in early 2000s, gold took off. I mean, throughout that early 2000s bear market, gold
totally
started a huge bull market then. So, like I said, it's not always guaranteed to go up, but it's one of the few that actually most of the time does actually tend to at least break even, if not rise in a recession. But particularly if there's an inflationary time, and particularly if we have any major intensification of wars, gold is where, since it served as money throughout history, gold is where people go when they're fearful and worried about things. And if there's a real crisis, you could see gold really taking off. And then the other way to make money, as we've talked about, if stocks are going down 50% or Bitcoin's going down 50% or bonds are going down, you can now buy, through the miracle of financial innovation, you can buy inverse ETFs. These are exchange traded funds that go up in price when the underlying asset goes down in price. And so at Bull and Bear Profits, what we do, we're trying to figure out, are we in a bull market or a bear market for a given asset, whether stocks or bonds or Bitcoin or gold or silver or whatever. And then if we're in a bull market, we recommend appropriate stocks and ETFs for that. If we're in a bear market, we can recommend inverse ETFs. So that's general strategy for navigating these bull and bear markets.
What is the best way? You and I talked about these inverse ETFs last time we were doing these videos, and I love the concept, right? Like I didn't even know they existed before our conversation. So I did a little research, and I was in my Webull account, and I noticed like the symbols that you said to buy, like they don't support the trading of those symbols. What is the best way to get those types of ETFs? And is there a risk to those ETFs? Like if obviously if the market's going down, they've got to be utilizing some sort of option strategy or something to support them. Otherwise, like what is the risk to investing in an ETF like that if the market's going down? Like where is the money coming from? How are they creating those positive returns?
Right. There's always risks. Those are excellent questions. Yes. First, to your first point, there are some brokerage firms that do not allow their investors to buy inverse ETFs. I guess the one you mentioned, I think Vanguard also does not allow it, with the idea that they are risky and people aren't smart enough to figure out how to use them. Maybe that's true for some people, but that's how we try to help. I think a lot of other brokerage firms do allow it, like Fidelity, Schwab, E-Trade, Interactive Brokers, Ameritrade. I don't endorse any brokers, but there are some that allow it. So that's one thing. And then the risks, there are definitely risks to inverse ETFs beyond, obviously, the biggest risk is you think stocks are going to fall and you buy an inverse ETFs and then the stock market takes off, which has happened the last couple of years. So then you're going to lose money, because that's what they're designed to do. You're going to lose money when stocks go up or whatever, and you make money when they go down. That's the design to do. In general, just one thing to note, it's generally safer and I think wiser to buy inverse ETFs based on a very large, popular, liquid index or asset. For example, the S&P 500. That inverse ETF is usually going to work better according to plan than an inverse ETF on biotech stocks or something. That's kind of very niche-y and small and that kind of thing. So that's one thing to be aware of. Let's see. So generally, the inverse ETFs, they're designed to do the opposite of what the underlying asset does on a daily basis. So if the S&P 500 falls 1%, the inverse ETF will go up 1%. And again, there are double, there are triple inverse ETFs, just like there are. So that, and the more that's more leverage, and that's riskier, and you're taking more and more risk, and there's more and more danger when you do that. But just know that. Anyway, so that's on a daily basis. So if you get a lot of volatility on a daily basis, then you're not, because of that daily compounding, the math doesn't work out precisely the way you would think.
Right.
If you're in a strong, let's say if the ideal is, let's say it's 2008, 2009, you're in a strong, clear downtrend, right? It's like a pretty steady, it's not going like, it's pretty clear. That actually, your return actually should be even better with an inverse ETF than you would think. If the S&P is down 50%, but if it's in kind of a straight line down 50%, you'll probably make 60, 70, 80%, you'll make more
because
than
it's
you would
compounding.
think because it's compound. Yeah. But if it's like super choppy down 50, you could even, sometimes you could even lose money, even though you should have made money, so that is a risk.
Yeah.
It's the volatility, the daily volatility. But generally, the well-managed inverse ETFs, like on the S&P 500, do work out well over long periods of time. They do work out more or less as you would expect them to. So the risk that we have,
somebody like me with that, the appeal would be because like I love the idea of being able to take some money and put it into like a little bit of a leveraged ETF like that, like a 2 to 3x leverage, because of I believe what I would call like the asymmetric risk involved.
And you're hedging, you're long real estate. Real estate might go down a little bit, profit on a recession with something else.
100%. And I'm looking at it more as a hedge.
Hedging, right. That's what most people use it for. Yeah.
Right. And so that's why I would be doing it. And so looking at it through that lens, most people use options to hedge, but options come with more risk. And I feel like
because you have to get the timing right on options. You don't have to get the timing right with this.
Exactly. So this is like a less risky way to kind of take advantage of a similar options strategy.
Right. And shorting, like if you actually short a stock or ETF, that's got its whole host of issues. With an inverse ETF, you're just buying it like you're buying a stock, and it goes up like it's supposed to, or it goes down, and you can anyway. So yeah, it's I think an easier way to do it. And but there are risks, just to get to your point. We haven't seen this yet.
Yeah.
We've had a functioning market and everything's fine. Everything's working according to plan, pretty much. But if there's a major financial crisis like 2008 or worse, then, there's two risks. One is the government may ban these inverse ETFs, and you may be forced to sell, and who knows what's going to happen with that. So that's an issue. They banned short selling in 2008. But from a technical financial standpoint, what they do, these funds are structured essentially mostly as swap agreements. So they're derivatives. So the fund company will enter into a swap agreement with JP Morgan, let's say, with some big financial institution. And JP Morgan agrees to pay, the opposite of whatever the market's doing. And they have their own hedging, and, for them, they're fine. They get a spread. And so if if you have a counterparty, a swap agreement with JP Morgan, and JP Morgan goes out of business and the government doesn't bail them out, that could be a problem. No one's really seen this. No one really knows what's going to happen, but that would be if the entire financial system is so bad and implodes, then there's some risk. Yeah. So if you start seeing that happening, you might just want to
just sell out
gold coins and hide in your basement or something. Yeah.
I just buy guns and ammo, man. That's
all right.
It's funny. Everybody bought gold back in like 2008 and 2009. I literally started buying AR-15 ammo. And it's crazy. and not for any other reason, but just as an investment. And honestly, it went up 300%, in value during the time that I had it. And I sold a lot of it, and took money back off the table. And I still have some of the ammo, and it's still worth about 400% more than what I paid for it back in 2009. And I could sell it like that if I wanted to. Right. So it's interesting. Like you just got to play. Like there's so many different
better
ways.
Than an inverse ETF. Yeah, that's
right.
Good.
Like there's so many different ways that you can make money. You just got to
be creative.
Understand where the
absolutely.
where the opportunities are.
But the key, first you need to know what can happen, and then how to monitor what's happening. These are all, we can spin all sorts of hypothetical disaster scenarios or good scenarios. AI is going to be great, and everything's going to be great. We can dream up all sorts of things, good or bad, but you need to at least understand what's in the realm of possibility, and then how to monitor them. And so, again, that's a lot of what I do is monitoring. I monitor over 100 economic indicators and technical financial indicators, really monitoring things and seeing, what's really going on, and to help you get an idea of what's likely to happen, so you can decide if you want to buy guns and ammo or buy Tesla stock or whatever.
Yeah. No, that's amazing. So, all right. So I would say right now, obviously tomorrow's the election. It's crazy that it's here already. I've already cast my ballot, so I know what I'm doing. It is what it is. But other people that are thinking, I would say from what I heard from you, there's definitely much more long-term positives to the Trump situation, even though not everything is positive, right? And there's not everything is positive. And the biggest to me with Trump, the biggest variable to Trump, whether it's ultimately a net positive or a net negative, is ultimately what is his real play with this tariff idea, right? If he's genuinely wanting to put the tariffs in play, that could be negative. But if he's doing what I think he's doing with them, which is he's using it as a negotiation tactic, and all his media coverage about it is literally just through that lens. He's playing the game at a different level, and nobody knows what to do with that, so that's a big reason why I feel the way I do about him, is because I feel like he's just a couple steps ahead of the game than most people. If I'm wrong on that, obviously, there's consequences to that, right? On either side of the spectrum. The Kamala Harris thing, for me personally, I'm just going to put my thing out there. I just don't trust her. Like, she won't debate. She won't say anything. She can't form a full sentence, in regards to any of her own opinions. And so that's just not somebody that I want in charge of the economy, or that I trust is going to do what they're going to say. At least with Trump, like, he's got a history of doing mostly what he says he's going to do. You know what I mean? He's not perfect by any stretch, but he's shown that he kind of knows how to take the helm and implement these tax cuts. He's already done it once before. I think, from a long-term perspective, even though I think there's a chance that having him come in might lead to a quicker decline, just in the nature that he has the luxury of being able to say, oh, okay, things are going bad, and I'm just going to blame it on the previous administration, which happens to be a thing whenever we do a transition from one party to the other. That often happens, where they just blame the previous administration on the problems, and they try to do the best they can from here forward. But I guess we'll see how it all plays out. But is there anything else that you would say to people, about, I don't know, the emotional processing of this all, right? Because no matter how I always say to people, life doesn't exist on a spreadsheet, and nerds like you and I like to look at numbers and analytics and all this stuff, and it's great on paper, but life doesn't exist on a spreadsheet. We are emotional beings. The economy is driven, I believe, more by emotion now than ever before, and we can actually separate the real results of the performance of investments and markets and the economy and everything. We can separate the technicals more from the actual results, due to the fact that it's driven more on emotion now than it ever has been.
That's a great point. And that made me think of something.
Yeah.
I think that, I'm an American. I live in Portugal, but I'm an American, and I love America, and I love my country and the people there and my friends and family there. And I want what's best for America. And yeah. I think if you're going to have a president, you're going to have a leader. Ideally, you want someone who is in favor of America and what's best for America and what's in America's interest, and who's positive and can inspire people. Unfortunately, I don't think either of these candidates are ideal. I think we can all agree on that, regardless of their policies. But I think this kind of reminds me of, well, one thing I'm thinking of is Ronald Reagan. I grew up in the 80s, and so when Reagan was first elected in the early 80s, I remember watching the news as a kid, and we had the Iran hostage crisis, and there were gas lines and price control, all these. It was, even as a kid, I knew this was not good. Interest rates were 20% or something. It was insane. And Reagan came in. The Fed hiked rates a lot. That helped. The Fed played a big role. But anyway, you had a recession, a pretty bad recession, or back-to-back recession, sort of in the early 80s. With Reagan. He was almost assassinated, which is interesting. And but Reagan had a certain way about him, and he got Americans to feel better about themselves. And you really saw a big shift, I think, in American psychology, much more positive and optimistic. And you had a boom in the 80s. I mean, the 80s, in retrospect, were a really great time. I think the music was great, and it was a fun time, I think, in general, even though there were a lot of problems going on still. But we avoided war with Russia. Reagan actually, helped, ease relations with Russia, I think. The Berlin Wall came down, but, he was relatively friendly with Gorbachev, and they, struck some deals and that kind of thing. So ideally, I think we have somebody who can bolster the confidence of Americans. Right now, consumer confidence is very low. It's very weak. I think we've had a really rough 4 or 5 years, particularly starting with COVID. It's been a really rough time, and I don't think, the current administration, I think we can all agree, not the most hands-on administration, not doing a lot to really cheer Americans up or get people positive. So, if the next president, whoever that may be, can really work to inspire Americans, create this, it's in a great country, it's a great economy, great people, very hardworking, so much potential there that is untapped. And if the government can just free the economy and free the energies of American people and remind us why we should be optimistic and proud and, and strive for a better life for ourselves and our family, then I think, you're going to have a boom like there's no tomorrow. And, stock market could still decline. So you still need some inverse ETFs or what have you. And gold may still be the place to be. We can still talk about investing, but I think, economically, maybe not the next year or two, because I think that is going to be tough. I think it is like the early 80s where there's going to be a recession, just like Reagan inherited. But I think you can have, a much better economy beyond that going forward. So that's what I hope for. Between these two, if I had to choose lesser two evils, I tend to agree with you. I think Trump has that potential, particularly if he has Elon Musk or some other good people cutting regulations and cutting spending and freeing up the economy and, getting smart people who can inspire people. It seems like he has, at this point in time, the better opportunity for that. But if he's going to be super negative and just tax everybody and build walls and fight with China and everything, or
you just said something. I want to say something before I forget, because you just said something about Trump and Musk and Elon and like you got Trump and you got Harris, right? And Trump has got Elon Musk in his corner, right? And Elon is pushing hardcore and doing all these things. Now, a lot of people like to bang and ridicule Trump for the fact that he's this business person. He's not a politician. And like, that's why a lot of people don't like him. That's why a lot of the people in the establishment don't like him. But if we look at it through the lens of the fact that you got Harris, who's a career politician, basically, and you got Trump, who's a career businessman, kind of playing the role of politician for a period of time, Trump is a human being, right? Like everybody knows he's far, fallible, like hugely fallible, totally imperfect. Like he's got a couple flaws. Like we'll all agree on that, right? That said, I think some of his flaws could actually be used to benefit the economy not because of him, but because of who he's surrounding himself with. And I trust Elon Musk. I trust, people that kind of are in that business stratosphere. And the cool part about Trump, and this just hit me, I don't know why, but like in the conversation here, but Trump, being a human being, knows he's got 4 years of presidency. And guess what happens after that? He goes back to being Trump the businessman. And the more he follows Elon Musk's lead, and the more he follows his guidance and empowers Elon and like listens to him and allows Elon to kind of mentor him in these ways, the more beneficial that is to Trump after he gets out of office, because he's going to solidify that relationship with him. And a lot of people might be like, that's really not what politics is supposed to be about. And I would agree with you wholeheartedly. And we're human, right? He's human. And if it's a net win for the country, like, I just look at it as some of his flaws of maybe saying, hey, like, I'm not doing this for this, but like subconsciously, you just can't get around it. If you're the president and you got Elon chirping in your ear, like, hey, Trump, this is what you need to do. And as Trump, you could be like, I'm either going to fight with the most successful person in human history, or I'm going to listen to him. And by the way, one of the side benefits, subconscious is speaking, one of the side benefits is if I listen to him, we might become friends in 5-6 years from now. Who knows what that means for me business-wise, right? So literally their relationship could be one of the most advantageous relationships this country has the world has ever seen.
I completely agree. That's a great point. And Trump, I think Trump is what, 78 years old. He knows he's not going to live forever. And he has children, right? He has children that he wants to leave a good country. He doesn't want World War III. He doesn't want, he wants a growing economy, et cetera, to leave something for his children. I'm sure Harris does as well, but anyway. But yeah, I think Elon Musk is a real wild card. I think, in my opinion, during the first Trump administration, he surrounded himself with a lot of not good people.
Agreed.
And that's why one reason his administration wasn't nearly as successful as it could have been. Hopefully, it seems like he's learned, some lessons from that, and that he's got to be better about picking the right people. And I agree, Elon Musk is, I'm sure not a perfect person in many ways, but
Sure.
he's pretty darn good compared to most people we see in public life. And it's pretty amazing what he's done, and he's pretty smart. So Elon Musk could be a real wild card if Trump gets elected and Trump really relies on Elon. But if Trump's just going to tweet all day and get in fights with people, that's not going to be productive.
That's
Hopefully
not,
be
yeah,
more
not productive. So is there anything, like, just kind of land the plane here? Is there anything that, like, specifically that you would say to people about, like, right now? And obviously I suggest everybody go download your newsletter, subscribe to your newsletter. You've got a bunch of different options on what those offers are, and I'll put the link in the description below so people can go do that and check you out and read and educate themselves and go through that lens. But kind of high level, generally speaking, timing the market is not advised, right? Generally speaking, like, there's all these things, like, people say you just kind of like consistently invest and it all works out. Once again, I don't agree with that philosophy personally. It's not how I run my life, but not everybody does things the way that what I do, not everybody's capable of doing, right? Like, and I'm fully aware of that. So that's why I always, like, hedge any of the advice I give to other people around, like, hey, you got to be really, you got to be really actively involved and know what you're doing to do what I do. But for the people that have 401ks, IRAs, Roths, people that have brokerage accounts, and that's kind of how they're managing their wealth. Do you have, like, 1 or 2 or 3 pieces of advice that you would say to people over the next 6 months, 12 months, 2 years, getting to the place where we go through this transition of pain, so to speak, so we can actually hit that growth cycle again?
Yeah, it's
I know this is a whole hour-long video.
That is the question. That is the question.
But, like,
you're right. Timing is really hard. We had the bear market in 2022, and then we've had this huge rally, even though the Fed has hiked rates, and it hasn't. The market has behaved due to investor psychology in its own world. Even though the economy has gotten weaker and weaker, unemployment's risen, the market keeps hitting new highs essentially. So it is really hard to time the market. So that's what I try to do. We try to do, my team and I, on our website and in the newsletter, is look at a lot of technical indicators to see if we are going to have another bear market like 2022, when that starts, what are the key indicators that show that? And so I would really encourage people to learn those kinds of indicators. A lot of it's technical analysis if you really want to try to figure this out. And that's what we have all kinds of free stuff to help people do that. So I think learning technical analysis is really important in the next 10 years, because again, if this was normal times, you could just put your excess money in an S&P 500 index fund and it's going to grow 5 to 10% or 12% or whatever. That's great. But these are not normal times because of where valuations are, and I think also with the economy. So it's really different now than everything you've been taught and experienced as a traditional investor. So it's really different. So you have to learn. I think you have to learn about valuations where we are now. You have to learn the technical analysis, and you have to learn these leading economic indicators, which is what we're focused on. So as far as what people do, I think there's a lot of learning that people need to do, to be honest.
Sure.
And just monitoring these indicators if you really want to manage your investments. Because again, I don't think you want to be 50% less in your investments 10 years from now than you are now. So learning a lot is always good to learn. There's an infinite amount to learn, but I think learning, again, a lot of the indicators that we talk about on our website are really valuable. And I spent over 30 years trying to figure all this out myself through a lot of painful trial and error. But as far as what people can do, obviously getting out of debt is great. Side incomes, starting a business on the side or whatever. I think we talked about that. That's all great. I think there's a lot of insurance things, which I know you're an expert on, that people should do. A lot of really interesting things that people can do there. And then as far as investments, the simplest thing I could say is, we're probably going to have a recession and the market's going to be down 50% in 10 years. What would you do? Simplest thing, is to say, all right, let's just put my money in a money market account and I can earn, 4% or whatever. It's not so bad. not a crazy idea. Whether you do it now or whether you wait until these technical indicators show that a bear market's really starting.
Yeah.
That's up to an individual. But, sitting in cash is not the worst thing if you're about to go into a recession and the market's, incredibly overvalued. So that's a simple thing to do. It does seem to me, based on the technical indicators, valuations, that gold in particular, silver is a little more cyclical. Silver doesn't always do well in recessions, but gold in particular, I think everybody should probably add some gold right now. I think gold, it all seems to be lining up for gold to continue over time, to continue going higher, at least for a while.
When you say gold, are you talking bullion, or are you talking like GLD ETF?
Yeah, it depends on the individual. You can buy gold coins. That's great. But then you have to protect it, et cetera. The simple way is to buy GLD, just like you're buying Apple stock or whatever. Just put over how much you want into there. I think buying some gold makes some sense. I think having some cash makes some sense. Pay off your debt. And then beyond that, then it gets a little tricky with these inverse ETFs. And that's where you really need to understand the technicals. And that's where I would really say to go to our website and look at all the free stuff we have. And if you can, invest in a subscription. It's pretty cheap, and I think it can
very
give
affordable.
you specific instructions. But cash and gold, not bad places to be, I think, for the next few years probably.
That's awesome. Okay, yeah, and I think now more than ever, like, that diversification is probably more important than ever. If you have, and when I say diversification, I mean actual diversification, because like the correlated movement in most investment funds and indexes is so similar. A lot of people are like, oh, I'm diversified because
I've got and small caps.
Yeah, big cap, small cap. The correlated movement between those now is so similar that
especially
it's not
in a bear market, they all go down.
Yeah. So like different asset classes that can protect you. The one thing we didn't talk about that I can't leave this conversation without talking about is you mentioned commodities, potential. I was reading something about Trump and, his policies on energy and oil, right? Obviously, his policies on energy and oil are far better for the U.S. consumer, because he's talking about tapping into, the largest, reserves of oil in the world that we have. I mean, they keep finding new oil deposits. I read something about the other day. They found one that's literally almost as big as like the oil they have in Saudi Arabia, right? Like, we have that right under us. So like, why we're not tapping into it and leveraging it and utilizing it and exporting it and all this stuff? I think there's probably political reasons at play and lobbyists and all these things that are trying to keep the price of oil up. And like, there's a lot of things to it. But I think Trump is more likely to be willing to do that, to drive. That's one of the things we could do to reduce inflation, whatever, is drive energy costs down. That's one of the greatest ways that we can put more money in the pockets of consumers, is to drive gas prices down, drive energy costs down, drive home fueling costs down. But that is deflationary, right? Like, and that is it's one of those things where like there's positives to it, but there's also negatives to it. Can you speak to like what you see, Harris versus Trump on the energy perspective and how that impacts the economy? Because then how that trickles into the economy impacts the stock market. Like, all of it's connected.
Yeah, that's a fantastic question. First, I just want to say on investments, commodities are incredibly cheap right now relative to history, relative to the stock market. So I do think, again, like the 1970s were a great decade for commodities in general, particularly gold. But commodities in general, I think, not in a recession necessarily, but over the next decade or so, probably outperform stocks, particularly if stocks are going down a lot. So I think commodities in general, including gold and silver, are definitely a place for people to focus on, unless what you say happens, potentially, because if the price of oil were to go down a lot, that's a big part of commodity fund, for example. But look, I think more energy production, oil would be great, and we can climate change thing. The nuclear energy, apparently very clean from a climate change standpoint. There's a lot of regulations on it that have limited it. My understanding is that there's ways to manage the risk of it, and anyway, so that's a potential clean, cheap, potentially cheap source of energy over time, but that's going to take a lot of time, et cetera. So, but I think, I mean, just to state the obvious, if anyone doesn't know, but energy, we need energy for the economy. We need energy to have food and all the things we enjoy having. So the more energy you have, the better for the economy. More energy, lower the energy costs, the better economically. Now, pollution and things, that's, it's a separate topic, but energy in general is good. So anything the government can do to generally encourage exploration, et cetera, is generally good for the economy. So as far as, if there's a huge increase in the supply of oil and the price of oil goes down, I think that's a big boom for economic growth and living standards around the world. I mean, probably there are very few things that would help the poor in the world more than that, to have lower, cheaper energy. So I think it would be a huge benefit. Now, you could buy an inverse ETF on oil and make some money that way, as far as investments go. If you have an overall commodities fund, maybe that, that's going to hurt the overall fund, but you could buy other commodities that maybe will go up in price because the economy is growing more rapidly, faster. So that could be from a particular standpoint. But as far as being deflationary, again, if there's let's say the production of oil doubles, and the price of oil falls in half or something, then the price of oil comes down. All else being equal, the price of other things related to oil comes down. But if the money supply stays the same, other prices will tend to go up because you have this, fixed amount of money. You're spending less money on oil. You could spend more money on computers or TVs or something else. So it generally, any change in a given commodity is not necessarily inflationary or deflationary. It's ultimately what happens with the money supply, which is controlled by the Federal Reserve. So I don't worry too much about deflation or inflation. What you want are more goods and services. Generally, you want more goods and services, and the more energy you have, the more goods and services you have. So I think it would be a huge positive, a huge boon if there's more energy production and energy is cheaper. I wouldn't see any major negatives out of that.
Okay, well, there you have it. So let's open up all the oil in the U.S. Let's go. What do you think the impact? Side note: this is totally different, but I'm. What do you think the impact would be like if the United States actually did what they could do to open up their potential for energy production with oil, and ended up like actually leveraging it and becoming not just being able to be self-sustainable with our oil, but like one of the largest producers of oil in the world. Like, and we took the power away from the Middle East, and we took our political interests out of the Middle East, and we got out of the wars that were involved with oil. And like, can you imagine?
It would be incredible. It would be incredible. I mean, we're selling weapons to a literal theocracy in the Middle East that has policies completely contradictory to everything America stands for. They're an ally. We have nuclear weapons pointed at Russia, which we probably have more in common with Russia than we do with a lot of these countries in the Middle East culturally. It's just insane. So I think it would be a huge positive. No doubt about it.
I mean, everybody is worried about like drilling in the U.S. and the environmental consequences, and they want to point to that. But what's worse, having to deal with some environmental issues that we can actually put some regulation around and kind of control and all this stuff, or getting into World War III? Which one would be worse? Like, if those are our two options for all the people that like want to play that card and like talk that conversation, to me, like, we live in this like environment where it's a bit entitled to be coming through this lens where you get to preach against one and say, I don't want this, and then rail against all the wars at the same time. It's hypocritical. Like we have an ability to completely take control of the situation. And this actually just came to me in this conversation. Like, we have this ability to control that environment by opening up energy in this country and doing that stuff. And we can literally like push all the other stuff aside. We are the ones around the world that control the direction of all this. We consume more oil, we consume more energy, we spend more in importing that from those other countries than anywhere else in the world. And so if we tap into our own resources, and that's it's going to make us and solidify and make us richer than we already are, right? It's going to make other countries who are doing it more poor, like and I'm not saying that like that's a good thing or a bad thing, but when we talk about what's best for the United States and what's best for us, so then we can, show up as the best version of ourselves to help the rest of the world and actually help them and not get involved in conflicts out of, the need for us to get oil to support,
Right.
like
Taking
whatever. We
Iraq's
can
oil.
actually show up in ways that are humanitarian driven, not self-serving driven, because we can take care of ourselves first.
Absolutely. And oil is a global commodity. I mean, if we lower the price of oil in the US with more production, you help everyone in the world, particularly poor people. I mean,
That's awesome.
healthcare will be better, in poor countries. And so it's hugely positive. And the more wealth you have, the better the economy and economic prosperity is, the more resources you have to devote to fighting pollution, fighting climate change. You can afford to do other things, to fight those issues. Look at, the pollution in the old Soviet Union was far worse than the United States, right? Because the U.S. had more money and we could afford, in the 1800s, people had low living standards. They couldn't, they were like happy to have a factory, even though it was spewing pollution everywhere.
Sure.
But now we have the luxury, because we have a higher standard of living, to say, okay, let's not maybe produce as much with this factory. Let's put something on this factory to make it less pollute less. And we can afford that, So the wealthier you are, typically the cleaner and better the ecology you have, the environment you have, because you can afford that thing. When you get wealthier, you can afford to have more leisure time. You can afford to go to a park and go for a hike, more than if you have to work all day to pay the bills. So the economy, it's not just, making billionaires richer or something. It's making everyone more prosperous and freeing up our time and energies to get what we want out of life. Not just money, but, cleaner air, cleaner rivers, whatever you want out of life. So more prosperity is generally a good thing. So we should.
A rising tide lifts all ships. Right?
That's right.
Like that just is what it is. So awesome, man. Well, this is fun. Is there anything else we didn't cover that you want to talk about? Like I could literally sit and talk about this stuff all day. I feel like I have so much fun.
This was pretty good. I'm just gonna one little thing or two I just wanted to mention. Back on, we didn't go more into Harris's policies, and I just want to make a point on this.
Okay, really fair enough.
But she, on some of the negatives, she has some tax hike things, and billionaires and that kind of thing. We already talked about that, and corporate tax hikes. And again, that's just going to reduce investment and lower living standards for people at the end of the day. That's all it's going to do. You might drive some billionaires to, renounce their U.S. citizenship and go to another country. I mean, there's nothing really good is going to come out of that except satisfying some envy of some people. She has a lot of, regulations on pricing. You don't want to control prices. Prices need to move freely. I mean, there's a whole, that's economics 101. Okay, but some things are major problems in the U.S. right now, which she's talking about addressing: affordable housing and affordable health care. Okay. Affordable housing and affordable health care are two big issues, and I think the government can do a lot in that area, but I would not do it by subsidizing housing or subsidizing healthcare, because that's what's led to this housing crisis we have now. Subsidizing education, that kind of thing. What you need to do is more competition. Competition lowers prices, you get more for people. So with housing, and if you invest in real estate, I don't know if you want to hear this part, but there's a lot of land that the government owns. And there's a lot of land, particularly in places like California, that you're not allowed to develop. They're just not. I used to live in the Bay Area. I mean, you can't touch most of that land. Allow people to develop land. There's so much land that could be developed, and so many people could be housed in land anyway. So there's a lot that can be done just on regulations that are easy and land ownership.
Sure.
That's a simple thing that doesn't cost the government a dime necessarily. And then on healthcare, it's a disaster. I mean, the cost of healthcare in the United States
so stupid.
Is horrible. And people say it's a free market healthcare system. It's nothing close to a free market system. No. Government pays for over half of healthcare spending. It's hugely subsidized by the government. So that creates artificial demand. If you can get free healthcare, then, you can go to the hospital every day and get tests done. And, how am I doing on this and that? You can spend a lot of money and do all sorts of optional things. And anyways, you can spend a lot of money if you're not really paying out of pocket for it. So the subsidies create artificially high costs. And then a big part, that's hard to get rid of, but the big part, which is easy for the government to do, and it doesn't cost me anything, is just allowing more competition. So there's all sorts of licenses on who can become a doctor, who can become a nurse, opening a hospital. I mean, try to open a hospital in
Oh my
Dallas,
gosh.
Texas or something. Yeah, it's impossible. So, you can open a McDonald's, you can open McDonald's all day long, but you can't open a hospital because, you got like 3 trillion regulations.
I got a
And
buddy that opens emergency rooms. He's got 7 emergency rooms between Arizona and Texas, and that's what he does. He opens these. He's the CEO of this company that overruns them or oversees them all. And he's like, the regulation is killing their profitability right now. It's almost to the point where they can't even make enough money. And then when you look at the price of the services and the fact that he can't even make it work financially, it's a broken system.
Yeah. So there's a lot more competition than these, and drug prices. I mean, this gets controversial, but the FDA, creates, it's incredibly expensive to come up with a new drug because of all these FDA regulations and patents. Do we really need patents on all these drugs? Like in supplements like vitamin C and that kind of thing.
Yeah.
It's a relatively free market, and there's lots of health benefits you can get from various supplements, and it's a relatively free market, and you can make your own decisions with your own body and your own life, and you have lots of competition. Prices are much lower, but the healthcare system in the U.S. it's far too government involvement on both the demand side and the supply side, and there's a lot that can be done there. Unfortunately, no politicians really talking about that. So.
They're not willing to. Like JD Vance in his interview with Rogan the other day talked about the whole pharmaceutical industry being able to advertise on TV, and talking about how a lot of people are like, well, do you really make your decisions about going out and getting Viagra or getting any kind of blood pressure medication because of the advertisement on the pharmaceutical ad? The answer is probably not, right? Like, you're not going out to do these things because you see the ad. The difference is, or the problem lies in the fact that when the pharmaceutical companies are the largest spenders of advertising revenue for these media outlets, well, they control the dynamic. If there are issues when we talk about having free media and honest and real journalism, if like these companies almost are bribed through having having their highest advertisers paying all this money, if that goes away, well, now we'll have like a more pure news source, if you will, right? And like,
right.
I just come through the lens, like, I don't know how you feel, but like, I just kind of look at the medical industry like as a broken system, as a corrupt system that is built on profitability, like the pharmaceutical companies, to a great extent.
Yeah.
What's that?
The insurance companies.
Companies. All of it is designed
Doctors.
to keep us basically to be a profit center for them. Like, if you think about it, like I look at, I know this is not the top point of this interview, but like, I've just got to get this off my chest now that we started going here, is like, when you look at this, I'm really big into natural health, right? Like, and I don't know if I've shared this with you or if you've seen it on my videos, but my father-in-law on November 4th, 2020, was diagnosed with stage 4 pancreatic cancer. He went into the hospital, into the ER, because we were playing pickleball. He twisted his ankle. He thought he like hurt his ankle. Turns out he had a blood clot in his ankle. It wasn't even twisted. It was just like tweaked because of the blood clot, and it triggered something. The blood clot went from his ankle to his groin. And when they were scanning it, they found the 7.5 centimeter tumor that was on his pancreas that had already spread to his liver. They gave him 90 days to live. And my wife and I said, no way, no how. We accelerated some death benefit from a life insurance policy, came out of pocket for almost $250,000 and paid for alternative medical treatments, had to do stuff in Mexico, had to do stuff in places because the FDA didn't even make it legal in the United States. Guess what? He's still alive 4 years later. He was just in the Dominican Republic visiting. I'm flying on Thursday to go see them back in Arizona. We're taking a trip back. I got to speak at an event in California on November 10th. So we're going back and going to spend a couple days there. And like, this is all stuff like his oncologists were like, you're crazy for doing this. And the bottom line is there's so many things. I'm really big into getting rid of the antidepressant usage in the United States, mental health and well-being, even utilizing some psychedelic stuff like psilocybin, ayahuasca, like all these types of things as ways to deal with depression. That have proven to be healing. And guess what? A lot of these things are blocked by the medical institutions, by the pharmaceuticals that are like they just want you to be on your Wellbutrin. They want you to be spending that money. And like, it's a corrupt system in my opinion. And if we could just get rid of all that, all the advertising, and if we could take as much of the money out of the media as possible in regards to pharmaceuticals, why are we one of 2 countries in the world that allow advertising pharmaceutical companies?
Yeah. Yeah, I would say as a free market guy, I agree with you generally 100%. I'm not so opposed to advertising, whoever wants to advertise. I get the point. But the main point is you got to get the government out of the healthcare industry. If the government's not involved, then you can say whatever you want on TV and advertise whatever you want. But as long as the government's not involved, then it's a free market. And I think people should be able to advertise, whatever they want. And if, the best usually wins. I understand. Given the structure we have now, I think you're right.
It's hard because the media, I think, especially in this shift where we have like Fox News and CNN and CNBC and all these places where their viewer rates are going way down because people are turning to YouTube and social media, and the consumption behaviors for people are shifting, right? So all these huge media outlets have shifted, and now you got a person like Joe Rogan who's got a platform that's bigger than all of them. You know what I mean? And which is crazy that one person now has that kind of influence. But I think it's also necessary in a lot of ways. But when you look at what's that?
You're next. After Joe
yeah,
Rogan.
I hope so. That'd be awesome. But you know what? Like when you look at the fact that these media outlets are struggling, they're shrinking, and then they're literally being propped up. I mean, if you look at, I don't know when the last time you watched, advertisement on like a Fox News would be, but 2 out of every 3 ads is a pharmaceutical ad, and the other, half of the other third is probably like a Fidelity or like a financial ad, right? And so it's just a McDonald's, fast food like thing. And the reality is most of the things that are driving the costs. I read an article the other like a year ago, and it was something like 80% of health issues are completely avoidable. Type 2 diabetes, like
diet
is
issues.
Diet is huge. And that's always been my challenge with the whole thing is like people make bad decisions and then it becomes everybody else's problem. And like, that's the hard.
And then you subsidize it. Ludwig von Mises is a famous economist.
Yeah.
Anyway, he said, you subsidize anything, you're going to get more of it. So when you give free healthcare for sick people, you're going to get more sick people.
Yep.
We understand the motivation, but you're encouraging irresponsible behavior and illness. And that's what's happened.
What do you call that? A moral hazard?
Yeah, I think so.
Yeah.
And yeah, the free, like you mentioned, like cancer clinics in Mexico. I think Mexico and Germany, maybe some other place, but they have very different laws.
Yeah.
And like I know in Germany and Mexico, doctors they're free to do what they want. They're free to say, hey, I think this, vitamin C is going to be really good or something.
Yeah.
Okay, let's try. Let's not say, oh, that's crazy, and we only can do chemotherapy, which works half the time and is going to kill you the other half of the time. That's the responsible way. Why not? Anyway, so allowing an intelligent doctor to make a decision and trusting the decision of the patient to say, okay, this is my life. I'm going to research this. I'm going to do what I think is my best judgment.
Yeah.
It's just crazy that some countries have figured out that being a little more creative and flexible is a better way to treat people. So yeah, I think a big thing is, so many, we're told we have a choice between a Republican and a Democrat, and tax rates can be 30% or 28%. We're given these binary choices, and there's so much more creativity that we could do if we just freed up the economy and let people come up with different ways of doing things. So I think that's the big lesson is let's get more creative with our political ideas. And you do that by freeing the economy, allowing more competition, more entrepreneurship to figure out better ways of doing things than we are now.
It's awesome. Well, I love it. All right, guys. Well, I think we're going to land the plane there. We're coming up on 2 hours. So thanks for the long, fun conversation. Hopefully this added value, as you're looking to go contemplate, make this decision. My guess is most of the people watching have already kind of made your mind up, but hopefully maybe this gave some confirmation to why you made the decision. And maybe for some of you, it helped pivot and helped you think about things a little bit differently. As always, I think it's important to just do the research and to do your due diligence and really, however you vote, just make sure you're critically thinking about it and not just kind of following the masses and not just kind of reactively voting because you belong to a certain party one way or the other. And, I truly believe this is one of the most important elections that we've ever had. And you could probably say that for every election, but you can't say that in every election we've been in the situation that we are right now. When it comes to the wars, when it comes to affordability, when it comes to inflation, when it comes to monetary policy, when it comes to government debt and unfunded liabilities, and kind of like literally the train wreck that we're facing for an economy, there are not many times that we've been in this situation. So, I do suggest whatever way you're looking, go out and vote. Like get your voice heard, play part of the system. I think it's important. And that's it. If you want to subscribe to Jon and the Bull and Bear Profits newsletter, I'm going to put the link. It's just bullandbearprofits.com too. You can go down and check it out. I really would suggest he's got a just wealth of resources. It was crazy. He sent me a link the other day and I went and started going through it all. I'm like, holy crap, my head was spinning. There's so much really good information to go through. It's actually really phenomenal. So as he said earlier, I think it's really important to start understanding this stuff. Like if you want to be a better investor, you have to become a better investor. You want better returns, you have to become a better investor. I think the days, well, I'll say this as we kind of land the plane here. The days of just giving your money to a money manager and thinking that they're going to do everything right for you and you're going to generate these crazy returns are just behind you. I'd be curious your feedback on another video. Let's do another video. I don't want to go deep into it, but I was doing this study and I was looking at the results of the economy and the stock market and returns, and I looked from like 1925 to 1979. And then I looked 1980 to 1999. And then I looked 2000 to today. And what's crazy is everybody's like, just buy and hold. And it's this long-term average rate of return is just going to be great. And if you take out 1980 to 1999, you just remove that from all the financial calculations, the results drop from like averaging just over 8% to averaging like 5.5%. It's crazy.
Yeah.
Like what the market actually performs at if you remove this one 20-year period over the past 100 whatever years, that 20-year period, is like probably the biggest bubble creation period ever. You know what I mean? And you remove that and like all the rules change, And so I'd be curious to talk to you about that.
And look at you don't have to look at almost any other country's stock market over 100 years. Almost nobody matches the United States. And does the United States in the next 100 years going to be like it was the last 100 years, dominating the world? I don't know.
Who knows?
Maybe not. So yeah, there's no guarantee. People think there's guaranteed 10% returns with the stock market. That's not the case, especially when you have valuations like we have now.
So you owe it to yourself to become a better investor. That's one of the reasons I love talking to Jon. I feel like I just love having these conversations. So thanks for coming in and playing game with me here. This is like probably the most fun I have all week is doing these sorts of things. But
thank you, Chris. I agree.
But I would say everybody go check out his newsletter, subscribe. It's free. He's got a paid version that I would absolutely suggest, upgrading to. But the free version on its own is definitely worth, kind of starting the process and going down your educational journey. It'll make you a better investor, and that's what it's all about. So that's it. I'll put the link in the description below. Go out, vote. Thanks. And until next time, have a blessed inspirational day. We'll talk soon.
Thanks, Chris.
Jon.